Good day crypto traders. As we enter the third trading week of November, the price of Ethereum is under significant bearish pressure. The bulls staged a counter-trend rally that lacked the luster of previous uptrend rallies after a 35% decline earlier this month. ETH's price could fall back to $1,000 if market conditions persist. As the bears attempt to destroy the $1,200 support area, the Ethereum price is showing signs that should cause concern. A rejection from the 8-day exponential moving average, EMA, sparked the recent downward trend. As long as the relative strength index, RSI, remains in oversold territory, the ETH price appears to be completely under the control of the bears on shorter time frames. Since the bears broke through the $1,200 level, a quick rebound has occurred, and the Ethereum price is currently auctioning at $1,209. Nevertheless, the volume profile indicator suggests that sidelined bulls are uninterested in the discounted ETH price at the moment, which may result in additional sell-offs in the future. The market's reaction to the ETH price drop is interesting because many crypto enthusiasts believe the decentralized smart contract token will see better days. Ekta Moria, a news reporter for FX Street, recently reported that the supply of ETH has significantly decreased since the merger. The article claims that the altcoin's energy consumption has decreased by 99%. This is a positive sign for the cryptocurrency industry, and it should be enough to combat the White House's current and future climate and energy implications for cryptocurrencies. However, bounces cannot be ruled out because, according to previous forecasts, invalidation of the bearish remains above $1,300 liquidity levels. ETH could reroute north and rally toward $1,800 and possibly $2,000 if the level is tagged. The price of Ethereum would rise by 80% in response to such a move. On Wednesday, Dogecoin, Doge, price action decreased by more than 1.5% during the intraday, whereas the majority of cryptocurrencies are up for the day. Traders are deciding whether to maintain their positions as a result of the weaker US dollar and the fact that the events in Poland last night were reduced to merely coincidental. Concerning Doge, a sideways to bring down design is turning out to be clear. Everything is fine as long as Tuesday's low holds. If it breaks, you can expect a brief correction. The price of Dogecoin is falling, but most cryptocurrencies appear to be immune to sudden events. Even though the fear gauge on the VIX fell and the Eurist is back above 1.04, not all traders are convinced of the downplayed event from last night. Despite Poland and NATO's earlier claims that it was an accident, traders are questioning whether any rally will be straightforward. As a result, traders are reluctant to invest a lot of money in the Doge price because rallies could easily collapse for a few hours if similar events like Tuesday evening occur again. The Doge price should look for support near 8 cents as it falls toward the red descending trend line. In the event that that level is broken, support lies around 7 cents, with the 55-day and 200-day simple moving averages, SMA, serving as supportive variables. A bullish breakout toward $0.0944 is granted if Doge's price finally catches up to its peers and sees that the weaker US dollar is providing a boost. There might even be a small move up to 10 cents in the upside. The monthly pivot comes into play if the bullish sentiment continues by the following week. The next hurdles are 11 cents and $0.1137. As whales finally enter the trading action, the price of Shiba Inu, SHIB, is set to continue its bullish trend. The SHIB price did not seem to be affected by the explosion in Poland on Tuesday night, indicating that traders in their positions are staying the course to see this through. Even though the first cap must be taken, there are a few technical factors to the upside before traders can relax and see a solid, ongoing rally. As markets eagerly trade on the weaker US dollar, which was the omen for the majority of 2022 in several asset classes, Shiba Inu price action is seeing momentum swing in its favor. The large drop in the value of the US dollar this week has been a boon for cryptocurrencies as a whole, and they are seeing gains as a result. If the red descending trend line breaks to the upside under the pressure that is currently building, expect to see a pop higher as more cash and large whales mix into SHIB. Price action. Before traders can begin to relax and observe the continuation of a broader stretched rally, the price action of SHIB would still have to overcome two additional obstacles on the top side. That first test will come from the 55-day straightforward moving normal, SMA, at $0.00001080, which holds significance for a large portion of October. The final one is the 200-day SMA at $0.00001180. It was chopped up at the beginning of the month and could be removed if the US dollar continues to fall. It is important to emphasize that markets are reacting in response to lower US inflation and a lower reading of the producer price index on Tuesday, which sparked the second round of weakness in the US dollar. The information that both metrics measured in October is missing from the market here. As a result, the fact that they both have lower print is quite normal. The Federal Reserve won't let up on the gas pedal for much longer than that. It is anticipated that the SHIB price will fall back below $0.00001000 and test $0.00000738 to the downside when the Fed delivers that message at upcoming events. After last night's events, Ripple, XRP, price action is very low, while other asset classes moved more strongly. In spite of the fact that it seems to be a mishap and blowback from Ukraine's protection framework against Russian rockets, it cautions that this tail risk is still a lot of present and should be considered in. Any pullbacks should be completely erased during the US session, and bullish sentiment should continue. The headlines published last night suggesting a possible escalation of violence in the Ukraine region had no effect on Ripple price action. After Poland left NATO following the deaths of two Polish citizens in a rumored Russian missile attack, traders were on the lookout for news stories about NATO. It became clear over the course of a few minutes that it was collateral damage from a bombing in the Ukrainian region near the Polish border that had activated the Ukraine defense system. This occasion, however, reminds dealers and markets that this is one tail risk not to be undervalued, as a few brokers will have gotten notice of being halted from making exchanges. This week, the price of XRP is expected to continue its upward trend, which is bullish. The 200-day simple moving average, SMA, near 40 cents is under increasing pressure. Expect $0.4228 to be the next cap to the upside once that breaks to the upside. Markets are on edge right now, but if the dollar weakens even more, expect price action in XRP to rise to 48 cents by the end of this week. The risk to the downside depends on the NATO statement as the investigation continues. NATO members would militarize and possibly take military action against Russia if they switched from Article 4 to Article 5. That would be a black swan event, a very significant market-moving event, and it could initially push XRP price action toward $0.37. A sharp decline toward 30 cents would follow in search of support.